Okay, welcome everybody. Another episode of Junior Resource Investing. Here today with me is Brian Skanderbeg, CEO of GFG Resources. GFG Resources is a North American-focused precious metals exploration company with a strong portfolio of highly prospective district-scale gold projects in Tier 1 mining jurisdictions, and they are currently drilling on their Gold Arm project. Before I hand it over to Brian and have a chat with him, though, as always, your standard disclaimer, not investment advice, entertainment purposes only, full notes in the YouTube notes below. But Brian, thank you for joining me. I hope your day is going well. How are you?
Yeah, great day out here in Saskatoon, Matt. Really excited to get on your program for this afternoon and tell you about what's exciting with GFG and everything on our front. So yeah, very happy to be with you today.
Yeah, I like it. Just another Saskatchewan guy, so I don't have to worry about time zones here. So thank you for that. Yeah. So, yeah, exactly right. I need that. So why don't we just, no place to start but the beginning, I suppose. Very simple, 30-second elevator pitch on GFG. How, what do you tell people? Why is it compelling? Why should investors care about your story?
25 million market cap company, backed by some of the most savvy investors and companies in the gold space, really active with a large portfolio of projects in Timmins. We'll drill about 10,000 meters. We found mines before. We've operated mines. We got a strong team, great property, money in the bank, and good shareholders.
So that checklist starts to develop, right? I mean, for me, when I came across your story and started doing my own research, your history and management's history in general is a big part of this story for me, as it is with any investment choice of mine. You with Claude Resources, do you care to discuss your own past and your own past successes?
Yeah, look, I mean, myself, I'm an explorationist, I'm a geologist, and like many geos, we've worked our way through a lot of different portions of our careers. And earlier time working in Red Lake with Gold Corp, I worked in Sudbury with Inco and predecessors to Valley and their nickel operations, and those were earlier stage opportunities. I spent some time in Namibia and Tanzania, did a master's in South Africa. Those were all sort of earlier stages of my career, and my first management role was truly with Claude Resources, and it's why I continue to call Saskatoon my base. Great city, raising a family here and continued with GFG. But with Claude, really unique opportunity where you have this established producer mindset, Saskatchewan focused single asset company had been around for 30 years and, had its own ups and downs through what is typically the challenges of a single asset producer, dependent on a single asset, the cycle of metal price, challenges on the labor side. And in the end, Claude was quite marginal. And what our team did, and I was the VP exploration at the time, was we were successful at finding an ore body called Santoy Gap. And in the end, Santoy Gap to me is the best solely gold ore body in the province. And it's a couple million ounces. It's a 9+ gram ore body. It's bulk mineable. And ultimately, it took a company from Claude, which was a producer and an established producer that I think had struggled really to get scale and momentum and most of all, margin. And we took this new ore body to production. First drill hole to production was about 4 or 5 years, which is a very telescoped development path. And ultimately, when that ore started hitting the mill and the cash flow on the balance sheet, what we did was transform a company that was basically break even or marginally profitable to something that had like a serious free cash flow yield, like 15-20% free cash flow yield at the corporate level. And ultimately, those drive re-rates in companies. And we were able to piggyback a new ore body, better ore body, and put Claude into a better position. And ultimately, it became an asset that was attractive to mid-tiers, and we had a number of inbounds at the corporate level once we put Claude into a profitable position. I subsequently had moved through COO and CEO roles and was running the company at that point. SSR put a very compelling bid in front of us, and in the end, it translated something that was from 10 cents a share. And if you ran the numbers these days, Claude shareholders received $5 or $6 a share. As it translated all the way through the VSSR shareholdings, and we ended up with 31% of a merge co at the time. The asset's still doing exceptionally well. Our employees are all happy. I still have a lot of ownership and belief in the asset. And ultimately, it's a good thing. You find a quality ore body. You found like a new discovery. A few new mines are found out there, but our team was successful at that, and we translated Claude into a different position. we've maintained a number of those individuals. Mark Lepage, business development VP. Anders Carlson, who was our exploration manager at Claude at the time, is now our VP exploration with GFG. Our CFO, Rick Johnson, and 3 out of our 4 independent board members all go back to Claude. So what you can see is this is a team that had a good track record, successful in a number of aspects of the business, not just in finding an ore body, but in actually putting it into production, translating it through, fixing, a corporate balance sheet, and then executing a strategy to unlock an immense value and get a re-rate and another re-rate when we took some equity from somebody we felt was immensely undervalued and re-rated the merge co. So these are all some things I've done in my past. GFG was set up essentially to keep this team together and be based here in Saskatoon and find the next vehicle that we wanted to run with. And GFG, go for gold or gift for God, depending on what your perception of the day is. So that's a bit about my history, my background, particularly with Claude, something myself and our team are quite proud of. And we would certainly hope to be able to find that ore body number 2 in our careers and say we found another great ore body.
Yeah, thank you. Lots for me to try to jump in there with. Excellent answer. I mean, for me, subjectively, though, it is big part of my own research is management, right? And I think that the way that you articulated yourself there speaks to why I also attracted to GFG. Smart, shrewd, and deliberate management, right? You make decisions that not in pursuit of fleeting share price response, but in a fashion that is meant to pursue the business of exploration, right? And then I want to talk about, as we will later, land acquisition and exploration decision making that I think kind of speaks to that as well. And also respecting shareholder value and yeah, lots of reasons why I think that management is such a it's such an industry of people. I think that GFG, that's one of your strengths here, as you articulate. Why don't we just transition? Maybe actually, sorry, one final question on that note. Maybe try to explain to me lessons that you bring from Claude, right? I mean, this is a big thing in this industry, is knowing what it takes to find success, knowing what success looks like and how to repeat that, right? What experiences or lessons do you bring with you to inform your decision-making today from your experiences with Claude?
Opportunities take the you find opportunities in unexpected areas, and often, people may have perceived Claude as being lacking in opportunity because of its history, or because it never seemed to make any money, or if it did, it had a couple of years of making profit and then was break even or losing money. And when you think about a path of an individual or a path of the company, recognizing a place to unlock value is always about your starting point. And when I think about Claude had a reputation, it had a challenge, and people would have perceived it not to have opportunity, but it had immense opportunity. It needed the right team, and it needed the right time, and it needed the right thought, it needed the right capital, investment at all different levels, whether it's human or capital intensity in terms of equipment infrastructure. So that was one of the things, was opportunity takes odd forms at times. A little more detailed experience, I would say, at an explorationist level, is that fertile belts have unique characteristics that translate to create ore bodies. And sometimes an explorationist needs to think about what their gut is telling them. And I'll take Santoy Gap as an example of a target where it was the most logical target in the entire camp. And, this camp had been producing for 25 years, and that target had been drilled twice, and the results were marginal on that target. So here you're sitting as an explorationist saying, what do we want to invest our capital into our portfolio of targets? And we had to go back and really we made that decision to say, we will go test that target a third time. And we need to be careful about what we're trying to answer. But targets can evolve, looking at things from a different search space. And as an explorationist, we think about search spaces. When I use the term, I just mean we're looking at the target differently. And that led to a step change in the results from, a 1 out of 10 hit rate at a marginal economic result to, 1 out of 10 on the second phase, but you actually got a little thicker hit and you got a better grade. And the third phase was 20 over 20. And the only difference was thinking about the target at a different elevation. So sometimes, the most obvious targets, even if they're in a mine environment or a pure greenfield environment, you just need to really think about them in a different way. If you, as an explorationist, still see that as an extremely valuable and attractive target, I would say don't be afraid to go back and test it in a different way. Because for the most part, the architecture of these targets, the things that drive mines are things you can sort of think of and see. You're like, it's fluid flow, it's structures, it's rock chemistry, it's all these intrusions that come in. It's all these parameters that make a target what it is. And if they're all stacked up there right, maybe it's just thinking about the target in a different way. And then it's probably about people, right? So we all want to have a high quality team, and we need to be cognizant of having the best people on board. So, getting GFG, bringing people across, even bringing some of the Anders in, and it took us 6 years to eventually extract Anders back into his role of working with our team. But it's nice to keep that really competent team together, and people are so key. I'm super proud of the group with GFG and the board as well. I think we work well together, and so those are some of the lessons I've learned about whether it's targets or infrastructure or people, and even think about gold systems. People ask me, well, why are you working in the Abitibi? Why aren't you working in Saskatchewan with GFG? And I think about it. I'm like, well, if I showed you a map that's 100 kilometers across of the Abitibi, or 200, and I say there's 30 ore bodies there greater than 1 million ounces in that map, and if I showed you the best area in Saskatchewan, you'd have one. And the systems are, the density of the systems and the character of the systems are inherently a different scale. We found a great ore body in Saskatchewan, and I think there are great ore bodies out there, but exploration is about probability. And to me, looking at what we were trying to do in Timmins led us to really focus on the Abitibi because of the character of the systems there and the infrastructure available. So those are some of the lessons I've learned, I guess, that I would take forward from Claude into GFG.
Excellent. Yeah, and lots of departure points for me to that I would want to go with conversation, and a lot of them I think that we'll bring up here. But I think I just want to finish off maybe the more boilerplate sort of slide deck questions before we get into the meat and potatoes of where GFG finds itself today and in terms of its approach and where it is. Yeah. But just so very simple share structure, right? I mean, insiders, institution, retail. Who owns what percentage of your company?
Yeah, look, I mean, we have about 200 million shares out. Insiders have always had a relevant ownership. We would own about 6 or 7% of the company. And if you think of that, that's myself, that's Mark, that's Rick, that's our board members. I would be certainly the largest chunk of that. And I've invested all the time in our financings, all going back to when we were even private. And what you see is management sometimes ends up with all these penny shares, and you're like, oh, they don't have any money in the game. Well, what I can tell you is my cost base on GFG is about 25 cents. And the lowest price offering I've done was probably in the last 2 financings. I don't have any seed capital or cheap stock from issuance, private rounds, or anything like that, nor does any of our management. So we've bought it all and continue to be committed through the financing. So that's the insider piece of it, is that there's still good, strong ownership. The management team and the board continue to participate in our financing, which I think is always a good sign. When you think about it at the bigger capital level of our shareholders, and I break those into a couple different baskets, on the corporate side, our biggest singular shareholder is actually Alamos Gold. Alamos is a mid-tier gold producer focused in the Abitibi, also has some assets down in Mexico, and would be certainly a very savvy, well-established, seasoned mid-tier in the gold space. And they've owned shares of our company and supported us in many of the last financings. And they continue to own 9.9%. They don't have any board representation, but we do engage with them on technical support and input, as we would with any of our shareholders that we thought we could garner some information or appreciated their insight from. So that's the corporate side of it. If we go to the private individual side, we have a pretty broad retail base that is quite scattered across North America. there is some chunky pieces of it. We have one shareholder in the U.S. that's pushing up almost 99% of us as well. Private individual based in the northern U.S. He's bought all the shares on the market. He is very much a contrarian investor. He did very well off Claude, and he certainly believes in us as a management team and continues to support us in our on the market purchases. And he did write a check in the last financing. So the retail piece in the landscape is certainly a big component to it. Then we go to like these institutional side, and I would say more high net worth investors on that end of it. And not that this individual in the U.S. isn't a high net worth individual, but I kind of carve them in a different basket. The Lundins are big shareholders of us, the family trusts and the accounts related to them in Geneva. So they've participated in 4 or 5 financings and very good supporters. They would be at about the 5% level. And then we go into the sort of basket of what I would say are traditional institutional investors, and whether it's a Gold 2000, whether it's a Delbrook, whether it's a US Global, Mackenzie, these are all seasoned, long-term, resource-focused investors that are largely long-only funds. And we've had a number of those participating in us over the years. And I would say there's probably, a half dozen that are in this sort of 3 to 5% range of them. So if you took this as an aggregate, I've just probably talked about 50% of our shareholder base, which would be insiders, high net worth individuals in the U.S., high net worth, more traditional resource investors, and then the institutional landscape piece to it as well. That would be a bit about our shareholder base. I think what I can say is we have some pretty savvy supporters that believe in us as a team and that have pretty good track records as well. So we take good pride in that, and we do a lot to maintain those relationships, both at the corporate level and the high net worth, some of our biggest shareholders, very key and supportive individuals.
And of course, I think a running theme for me the last couple of days of my conversations, and I mean, sometimes it's obvious, but how important the human element is, right? And so I guess for me, what you just explained is how much your own shareholders trust, not even necessarily an individual project, but just you as a management team to find that project to turn into a mine or an economically advantageous outcome for investors. And I'd want to talk about. Again, I keep trying to get ahead of myself here. I do want to talk about the history of your company, because I find that to be a very interesting and emblematic or perfect example of that grind of that is exploration. But maybe before we talk about the past, let's talk about just the present right now, right? So it's 2023. This is your 3rd season on Montclerg and Gold Arm, if I'm not incorrect. And you're just nicely starting. You had a nice little assay that you dropped this morning for news. Today being September the 6th. Yep. Your phase 2 of a 10,000-ish meter drill program. Do you mind just kind of giving us a quick update? Where are you with phase 2? What are you drilling? What have you got left? What's next?
Yeah, look, we designed this year's budget 2023 with an allocation of, plus or minus 10,000 meters into Timmins. And phase 1, we drilled around that sort of 3,500 mark. Phase 2 is in the sort of 5,000 to 6,000 meter mark. And that's going to kick off here in the short term. And short term, I mean later this week or early next week. So I feel pretty good about where we are. Montclerg is an interesting system in that, yes, we've been there 2.5 years. I think we go back to October 2021 when we acquired the asset. And, we looked at it at the time and said, here's an interesting system. It's in a great location from an infrastructure potential. We think it's been kind of been off the mark in terms of hasn't been well thought about or certainly well explored over the last several exploration cycles. And most of the work down there goes back to the 30s and the 40s and the 60s, certainly not by modern times. And the majority of it was very shallow drilling. So we added that to the portfolio back in 2021. We've executed about, 15,000 meters of drilling on the project over the last 2 cycles of exploration. That's over the last kind of two years, plus or minus. And when we think about what we've done, I think we've shown a good track record of ultimately publishing economic hits at a reasonable depth, growing the system on a local scale at the deposit. Which typically involves growing it on strike or growing it on depth, and building an understanding and a proper pipeline to contribute to what is the next phase of drill targets, which ultimately aren't discoveries yet, and there may not be any economic hits in them yet, but they're concepts. And they're concepts undercover. They're concepts next to the highway, next to good infrastructure. And the ones that I don't think people have stepped out really to look at very coherently. So when we think about our portfolio in Timmins, the goal has always been to build a strong portfolio and a pipeline. And when I think about that and the team thinks about that, you've got your most advanced assets, most advanced targets. That's where you're allocating most of your meterage. And as you filter down, I think it's really important as an explorationist to take 20, 30, 35, probably wouldn't push 40% of your meters and go test your concepts that are the next deposit to be found. And it's not out of non-belief in something like Montclerg. It's really saying we put these land positions together, we understand them, we target them, and we need a proper allocation of our drill meterage. So that's where we are in Timmins. We have 800 square kilometers of ground. I think it's next only to Newmont in terms of regional land holdings and the scale of them. And there's lots of targets, and even getting Anders on board, and I'm sure we'll continue to flesh out the team further, that there's lots of hidden opportunity in 800 square kilometers of ground in a belt like the Abitibi. So I fully expect that we'll keep populating really quality targets and advancing them to be drill stage ready, and continuing to test Montclerg and Gold Arm. And hopefully Montclerg gets to a critical mass and becomes something that we can publish a resource on and advance towards a deposit where we can see economics taking shape in it. And it's in an area of the Abitibi that's really attractive. And I think it's heating up in terms of the amount of work going on, the number of peers that are putting out good quality resource bases or good quality exploration results. And ultimately, this is why we think, the eastern portion of Timmins and even greater Timmins is a great place to invest.
And that's something you and I chatted on a panel discussion a couple of weeks back, and a lot of discussion around Timmins and all the obvious advantages it holds, and ultimately creates such a low hurdle towards economic viability. We can talk about that, but I think I want to maybe just return to your drill program here a bit, just to shed some more light on it, because I think it's obviously an important part of any explorer's story. Even though we maybe don't give enough credit to all the above ground and iterative work that goes on prior to the drill core coming up, but do you mind just breaking down? You kind of already did a little bit, but do you mind? How much of this drill program is testing, true wildcat discovery targets? How much of this is, as you kind of said, step out or down, along strike or at depth, sort of extension work, step out work? And then how much of this, is there infilling, as you would say? As I know that you have some historical work to talk that we can touch on that later, but do you mind just kind of trying to break down your meterage a bit more for us?
Yeah, we took a ballpark and said if we were going to drill 10,000 meters this year, and I'm generally a 70-30 guy, and by that mean I want to see 70% of the meters going into something that we would say is resource caliber in terms of continuity and grade. And so we think about that and what that means for us at Montclerg. And what I think that means is we would take about 70% of our meters and we'd allocate them at the deposit scale, and that might be infill or it might be extension. And I think both of those are really valid applications depending on where the company's at. There are certainly some areas where we need to infill the deposit. And I would probably say we might have a couple thousand meters allocated towards holes like that. Then there's the next phase, which is kind of, typically in the sort of 50 to 150 meter step out depth or strike extension scale testing. And you might have another 40-50% of your meters going into that. So that may be 4,000 or 5,000 meters. So those two give us that 70% number. And if you're just talking about 10,000 meters, those are in terms of thousands of meters. And then you take the other 30% or 25% and things like algal, things like the car porphyry, things like we want to step out there 1.5 kilometers and, test the strike extension, the same stratigraphy, and we want to test a target out there undercover. Moving to the east of Montclerg, and we might have 30% of our meters going into targets like that. And I think the logic to this weighting is that we want the best and the majority of our meters going into value creation. Value creation is probably inherently different for many investors and individuals. To me, it's about putting dollars into resource growth. And to me, Montclerg is something that we can get to a resource, and we want to see a good chunk of our meters going into there. And we want to also ensure, we can find the next one and build the pipeline across what is 30 kilometers of ground just within the Gold Arm and the greater Gold Arm block of properties. So that's a bit around allocation. And it's also designed to say, look, we have a necessity as an exploration company, to create value for our shareholders. Creating value for your shareholders requires momentum. Momentum in this market and many capital markets means we need continuity of good, strong results. And it's a good balanced way, I think, to keep generating consistent news, showing our shareholders we're building value, not taking too much risk all at once. Too much risk all at once would be taking 80% of your allocation of drill meters and putting them into primary testing of first phase drill results. Some management teams would operate that way. That's not how our company chooses to allocate.
Certainly high risk, right? That if you swing and you miss and you have to go cap in hand on the market, things can get ugly in a hurry, right? In terms of managing the treasury. Absolutely. So circling back, I mean, I touched, and I don't know if we need to. I'm assuming people know. I mean, Abitibi, Timmins, its advantages speak for itself. I think a little bit. I mean, I'm happy to give you some time if you want to touch on that. But for me, part of that, of course, is having that suite of knowledge from the ground, above and below ground exploration that you can rely on. You know, that you aren't the first person. This is not true green fields. You have that knowledge base to work from. Can you just run through, just looking at my notes here, the historical drilling, and let's focus on, Gold Arm and Aljo and Montclerg. I mean, if you can give us a generalized discussion about previous exploration in terms of meterage, but then maybe more important than just kind of that by rote explanation of what has happened, how are you utilizing that knowledge, or how are you changing your approach? How are you altering the thesis that you're approaching your land packages with to further success or to find more success?
Yeah, look, I mean, the legacy data, if I just talk drilling, was about 120 drill holes, plus minus 20,000 meters. And so you could quick math tell you, see, maybe they're 150 meters a hole. They're generally a lot of pretty short holes and a couple longer holes. And the vast majority of that drilling was completed right on the Montclerg deposit. When we think about the bigger position of land and that historic work, I mean, this is classic Kidd Monroe assemblage. If you know Timmins geology, the same geology that we have on our property hosts Kidd Creek VMS deposit. So there's also embedded within our portfolio opportunity that has Kidd style VMS mineralization. And the reason I allude to this here is that it relates to how we use the pieces of historic data and how we target from that. So if we looked at just gold, Montclerg, there's good magnetic data we use. There's obviously some superficial sampling, although it's not a lot. And part of the reason we went to Gold Arm and selected the properties we have in Timmins is because there's a paucity of outcrop. And generally, we're looking at 10, 20, 30 meters at till. Nothing that's 60, 70, 80 meters that becomes quite technically challenging, A, to either see through, or B, to actually mine through if you get something relevant beneath it. So it's kind of a sweet spot in terms of the overburden cover, where we think it's preserved enough endowment. Things can still be found underneath there at a shallow level. And so we think our chances are better exploring in areas like this. So I like that about Penn. I like that about Montclerg. And when we look at the regional data we use, this magnetic data, this till sampling data, we use that to target beneath cover quite regionally. That being said, it's pretty immature. If you took the drilling outside of Montclerg, couple dozen holes over 30 kilometers is not a lot of drilling. And to me, when we looked at this land position, the scale of the structures that are encompassing and moving through the land position, these are big plumbing systems. There's big deposits along these corridors, and it remains remarkably immature from an exploration point of view. So there is data there. There's things we can use. Most of the data is focused at Montclerg, so we capture all the drill holes. We capture that. We understand why people did what they do, and then we do our best to model our own thoughts to it and say, how can we grow Montclerg into a sizable deposit? In tandem with that, we're taking the regional philosophy, which is there's 30 kilometers of ground here. We know there's big structures in here. We know people haven't really looked in detail under this till cover. and what do we need to add in terms of the data layers to properly explore. So we're still capturing data. 2 years later, we're still pulling out pieces of the historic data on this 30 kilometers of belt that we have to capture and help that guide better targeting in the regional land position. And I would use an example of something like Falconbridge drilled some holes, 15 kilometers to the east of Montclerg in the 70s and 80s. Gold rich VMS style mineralization just off our property boundary. And we're still pulling together the data to target systems like that have immense reward and value to be unlocked as well. So, I mean, it's an exciting piece of ground, because the infrastructure location, but equally it's endowment and deposit styles and scale that is around us, where one of the biggest VMS deposits in the world sits 30 kilometers along strike to the west of Montclerg, and it's in the same volcanic stratigraphy in the same style of setting. And we're still building the targets and the data's work that we would want to effectively target VMS style mineralization, which takes a bit different basket of data than say pure gold exploration does. So that's a bit about how we're using the legacy data, where we are right now, and then where we still need to go in terms of some of the regional targeting and potential value unlock of having such a large land position and being able to target iteratively across it.
Well, I think this actually is a good opportunity for me to dovetail into a conversation that you and I chatted about prior to coming on air. That to me, so Montclerg, that your current land package is not the one that you started with 5-6 years ago. That if you have been following the story of GFG, that you've kind of gone through Rattlesnake Hills and then Penn and Dory, and you've come to a project and you've put your due diligence in. And then you've moved on, right? And I think that sometimes you see from the retail perspective that there is maybe an overly emotional response or impatience or frustration where you see, that company is a flop, it's a failure, and I don't think this is just me putting a spin on things. I don't think this is me just like I say, manipulating things to sound good. To me, that is evidence of a strong management team, right? And I don't want to sit here and just kind of toot your horn, but to me, that grind, unless you're extraordinarily lucky and you get, like a bonanza discovery hole, your first hole, which, I mean, let me know if you ever find out if that ever happens, right? But that process of selection, exploration, and then moving on if it doesn't fit your model, I think is part of what, again, draws me to you as a management team. Maybe I would just ask as a recap or a synopsis of where you've come from. Do you just want to discuss previous projects that you have put time into, maybe why you set them aside, and then maybe, I'll ask you this question afterwards, but maybe just so you can have your mind wrapped around it. I mean, how do you balance that fine line between like tenacity and not giving up after a couple of dusters, but then that flexibility to know when it is time to move on, right? But maybe first you just want to kind of run through projects that came before where you are and what caused you to move on with them.
Sure. Portfolio turnover is just inherent to what we need to do as explorationists. And so if I just stay big picture, ultimately what we're trying to do is find that needle in the haystack, and we all understand the probability of game and is that it's a long odds against us. So even if we're the most effective explorers and we understand everything to do and we're executing perfectly, we will still fail the majority of the time by far. And as a management team, talking with some peers in the space and even some mentors that I would have had and continue to have, it's like you cannot be afraid to pivot if the asset's right. And you cannot be afraid to pivot if you're not seeing what you want to see in the system in terms of generating a path that ultimately builds value. So when we think about our portfolio and stages that the company's gone through, GFG started off with Rattlesnake Hills, and this asset in the U.S. is a full alkaline gold district. It's a 135 square kilometer land position, and there's 100,000 meters of drilling in this deposit there, 2 deposits. So it's really strong components to that system. That being said, it's a seasonality of an exploration game where you can explore that asset kind of 5-6 months of the year. It's in the US. So you don't have access to flow through. Everything you raise is hard dollar side. It is in Wyoming where, it's a great extractive industry driven state. That being said, there's no or limited existing gold infrastructure present there. So the asset has some good things going for it, and it still has relevant greenfield potential, and you can still grow the deposits. But what we had to ask ourselves is, can GFG flow successfully to generate value as a single asset company with Rattlesnake Hills? And we got to the conclusion was that we couldn't. And it was a combination of rationale about perception of the asset, what it took to unlock the value, and what it was going to mean in terms of generating value for our shareholders. And when we thought about that, ultimately our history with Claude showed us and gave us a lot of experience in the Abitibi, because with Claude, we did look at a lot of the systems in the Abitibi as peers, and we almost merged with a number of them. And so understanding that, we made that pivot back to Penn and Dory, and Penn and Dory was added in to say, let's start this portfolio in Timmins. And that decision was a very critical one for GFG. And when we looked at that, and before we acquired Rapier, the company, or did the deals with Probe and Alamos and several other smaller groups, and even a Cisco, we looked across the Abitibi, and we were in a number of these processes looking at opportunities. And ultimately what we found with Timmins was it had the most attractive entry point of any of the major centers of infrastructure in the Abitibi. And by that, I mean, you could get a quality piece of ground at a cost that was palpable for a company like GFG, and you could get a foothold there and continue to build on. So the Penn Dory blocks, yes, they were greenfield and they were early stage, and we went there and we started with those properties. We explored them, and we still have them in our portfolio. It was always part of a vision to say, let's be Abitibi focused. We very much like the entry point into Timmins, and we will continue this portfolio building process, which naturally evolves upscale in terms of the stage of development. So even when we went to the Abitibi, 4 or 5 years ago and bought Penn and Dory, it was with an idea to say, there's going to be other processes. This is a consolidation vision that we had for this area. And we will continue to keep looking. And Montclerg is the second step of that to say, all right, we've got another advanced asset. Have we given up on Penn and Dory yet? Nope, not at all. It's just a step in portfolio building. Rattlesnake, yes, there was a hard pivot where you have to make a choice about whether and how you're going to advance an asset. As it relates to the continued portfolio build in Timmins, I think that's a natural progression that continues to add ground. So this concept of pivoting and what we like is such a complex process of that you have to trust management on. And if management's not seeing the results they like to see and want to see, they need to pivot. And as a shareholder, if you don't believe in management, then you shouldn't be a shareholder. And so this concept of adding another portfolio asset, if you understand the logic and you find management talking credibly about the vision and the strategy and why they do what they do, then I think those are the types of questions you should be asking management when they're undertaking some strategic pivots, which many exploration companies do. And if you look through many of our peers, the vast majority of successes are not first assets or even first kick of the can. They require to pivot, they require to change, and that's just a function of the risk portion or risk probability that we play in.
And so this will be a subjective conversation, and I'll try to phrase it in a way that it allows you to discuss it more concretely. But that persistence versus flexibility, where don't throw in the towel too quickly versus don't. I almost relate it back to for investors, don't fall in love with a stock. Geologists don't fall in love with a resource, or don't fall in love with a land claim. Right? What is it? Just a gut instinct? Is it data driven? I mean, obviously both, maybe a little bit. But can you just try to provide some context or color on that process of deciding when it is time to kind of pull up stakes and try somewhere else?
Yeah, I mean, maybe an example is is what we have for a vision at Gold Arm. And when we would have acquired this block of ground, we look at it and say, okay, there's this dual strategy of how we're exploring this land position, and it's deposit scale focused and it's greenfield, and both of those are ongoing in tandem. So when I think about how we are exploring it and what would cause us to review or change an alternative, it's like, is the deposit not heading in a direction we want from a critical path? Is it not getting the right scale? Is it not showing the right continuity? Is it not showing some sort of economic path to where you can say, yeah, this stuff belongs in a mill, and it belongs in a mill because it's this size, this grade, this tonnage, and these metallurgical characteristics. So that's the one side of the strategy. The second side of it is the area and the tenement conducive to how we're approaching our exploration philosophy? And this is an interesting one in the sense that it's extremely difficult to explore under, greater than 50 meters at till. A, it gets expensive. B, your sort of accuracy really drops off. Your geophysical techniques are less applicable as you're looking through that depth of cover. So if we're not seeing the character and the quality of regional targets come out of our regional targeting work at an early stage, then we have to ask ourselves, is it just not there? Or is it too small? Or are techniques, exploration techniques, not working very well? So I would look for both of those questions to be answered in terms of how we approach our philosophy and, how we review our targets. And even something in Penn where we're like, there's still lots of really good drill targets valid at Penn, but we just have to do it in a balanced approach where we might have some high quality targets at Penn that we rightfully should be weighing and are weighing versus drilling a target on Gold Arm. And that's the great thing about building a portfolio and getting a mature portfolio and getting it to the level where you actually understand each of these targets and have all the data layers you want, is you can cycle back and review some of those targets. And I think Penn's a good example, and even Dory, where we still have more work to do there. We just have to do it in a methodical and sort of stepwise approach. So those are kind of the things I look for in the philosophy is on the regional side at Gold Arm.
Which I think we touched on this, but again, it goes back to that the optionality it provides is such a huge hedge for risk management, right? That like you say, a one trick pony. If I'm going to butcher an analogy here, but if one trick pony's legs break, then there's no trick left, right? So as an exploration company, multiple kicks of the can, even like you say, from a practical perspective of staying in the news cycle, right? If you can get a little bit of news flow going on multiple projects. Why don't we circle back here though? Rattlesnake Hills is a very interesting one for me. I mean, you always cheer for companies doing new things, right? It revitalizes the industry. It provides new technology, new knowledge. And so Group 11 is trying this ISR in situ recovery, which, normal for for uranium, less normal for gold. Is there any update on there that you can provide for us?
Yeah, look, the last public news that we put out on Rattlesnake from Group 11 was related to some of the preliminary metallurgical work that was completed in 2022. And ultimately that looked quite positive in the sense that what they showed was they could get, 60, 70% of the gold out of a rock without crushing it using no cyanide. And that was extremely encouraging from a preliminary stage. That being said, they struggled to be able to raise some capital. They are owned partially by Environmental, one of the parents that's gone through some management changes. So ultimately we haven't really gained the traction we would have hoped in Group 11 would have hoped at the asset level of being able to push forward. I'm optimistic we can find a path. If we don't, it's a conventional option agreement. If they don't spend dollars and if they don't commit to a certain amount of work thresholds, then we would have the asset come back to us. So at this stage, Group 11 has continued to look for financing sources. As we have some more concrete or more definitive news that we can talk about publicly, we will. And, I would hope to be in a position in the next several weeks to months to provide an update back to the market on where we're going with Rattlesnake Hills.
Sure. So, I mean, we're nearing the end of this. We will discuss a little bit more in terms of your drill campaign. I mean, you have a couple of nice assays, but I'll sidestep that, even though, I mean, they're always nice to talk about. But do you just want to talk about, you mentioned the Lundins are in, Alamos is in, as a retail investor, obviously there is affirmation when you see names like that involved, right? Can you just discuss, maybe for Alamos, what was their motivation? What did they enter for? Was it Montclerg? Was it just the relationship that they had with you over the course of several years? Yeah, we'll start there. I'll stop that. Why did they enter, and what's your relationship with them?
Look, I mean, GFGs, being a consolidator and explorer, we're very cognizant of building our corporate relations. And I can tell you that there's probably not a mid-tier major out there that we don't have a reasonably strong relationship with. We're very open. We tell them what we're doing. We're not like in our box working secretively about what we're doing. And Alamos is a group that came into us as a shareholder base 3 or 4 years ago. And ironically, they came in for some really encouraging drill results that we saw out of Penn. And there was a target called Nibelunif that we tested. We saw some exceptionally high grade hits. This is back probably 4 or 5 years ago, and 3, 4 years ago. And Alamos came in to our share registry at the time and participated in a financing, believing that their technical group has always liked aspects of the Swayze Greenstone belt for various technical reasons. And here we had a company like GFG that had gone into the Swayze, had applied the methodology that was consistent with what their technical group would have felt was appropriate, and had made a relevant high-grade, hit in terms of some new exploration results. So that led them into us. In the end, we couldn't show continuity at that target. So we had a great hit, but it didn't go anywhere. And so, the next phase of drilling showed that, that specific target would have been deprioritized. And Alamos sat out for a financing round, and they didn't participate in our next one. We always kept them informed, and we're very open with them about the strategy. And even when we brought Gold Arm and Montclerg into the property, we were very open with them about the rationale. And they wanted to see, okay, well, what's GFG doing in terms of generating results? And we subsequently went out there and we drilled things like 16 grams over 10 meters, 5 grams over 25 meters, 8 over 8. So we were showing economic hits at a shallow depth, and that was encouragement enough for Alamos to come back, top themselves back up to 9.9 in their registry and participate in the financing. So I think with them, we find a group that is leveraged to the jurisdiction and believes in the endowment in the belt and the potential for new discovery there. And obviously they need to believe in us as an explorer and the team to want to be a shareholder. So that's a bit of history of why Alamos is engaged, and they continue to be good, strong supporters. As it relates to, groups like the Lundin, I think these are exceptionally savvy long-term investors. And if you look at the wins that the family has had over the years, it is long-term investing in people, the right groups of people with the right track record, working in belts that are productive and sticking to it. And they are amongst, to me, the best shareholders to find, A, because they're technically competent, but B, they get the business in terms of risk. They're not buying your equity for the next drill hole. They are and they aren't. They're buying it for the next 100 drill holes, knowing that the belt is there to be unlocked, and they're buying the people and investing the people to explore in that belt. So I think they're extremely supportive shareholders, and they continue to participate in our financings, and the relationships are very positive with that group.
Maybe just one quick follow-up there, and I don't want to belabor this, just we're nearing the end here, but excuse me. In terms of informational or technological expertise, do they provide any to you, or are they hands-off?
Lundin would be a little more hands-off, and the dialogue is more at a higher level at the corporate and share registry level. Whereas groups like Alamos, we certainly will tap them and have technical meetings and reviews and update them on our process. And so they would be definitely more involved at the technical level.
Mm-hmm. Okay, thank you. just a couple of questions left here, Brian. I mean, I think that sometimes retail does a disservice to itself by focusing too much on the drill. Obviously, there's a huge aspect to it, and that's where companies are made or broken sometimes. But obviously, there's a lot leading up to it that doesn't probably get enough credit. But I mean, focusing on assays, you do have some good hits, right? I mean, you got 70 meters of 1.6 grams. I think it was 10 meters of 9 grams, something like that, or 9 meters of 10 grams, somewhere in there. So I mean, you are kind of probing the edges of something that could be like a very substantial resource if you can locate it and start targeting and hitting it, I guess, right? Do you want to just a transition, I guess, what do we have to look forward to? How many meters then, if we're talking about drilling, how many meters are still in the lab? How many meters are left to be drilled? I mean, what's the news flow, over the next 6 to 12 months? What's the news flow maybe that investors can look forward to from GFG?
Yeah, look, in terms of our plan for the remainder of H2 of 2023, we're going to drill 5,000 or 6,000 meters. And, for us, if we're drilling 300, 250 meter long holes, that's kind of on the order of 20, 25 holes. And so I think that provides us a good runway in terms of distribution and news flow. We don't currently have any assays at the lab. What we published this morning was really our last batch of the Q2 drilling. And those worked through. We got them finally all back, and we were in a position to put out the last 5 holes of that drill program. What the market can look forward to is some larger scale step outs and understanding the system at Montclerg proper. So when we think about Montclerg, our deepest drill holes are around the 300 meter mark and vertically, and then we've chased this thing back up to surface, and we've defined it over about 0.5 kilometer. And we have some drilling outside of the path that still showed the system still working, so we're going to work on that. But what we want to be able to do is say, step down 100, 150 meters on Montclerg Central and say, does our lower footwall zone actually have some traction to generate those economic hits and show, step change in scale to get to relevance of resource base? So that's what I've talked to Anders a fair bit about is this next stage of drill program. Yeah, we need to look at, depth continuity here. We need to pull this thing up to surface. If there's some gaps in the area, there's probably some infill that's needed as well. So I think there's a pretty good probability that the program we're putting together shows, very relevant system scale growth. And that's what I'm optimistic to deliver on over the next, 6 to 12 months. If we can execute 5,000 meters here at Montclerg in H2, and we can step out in Q1 and put another 3,000 or 4,000 meters in, let's just think over the next 12 months what we'd like to see. We'd like to see another 10,000+ meters go into the system and say, I think we can get this thing to critical mass here. Is it 1 million ounces at 5 grams? Is it 1 million ounces of, that's pitable at 2 grams? Well, those are the variables we're still working through in terms of some of our models and what the system looks like. So the catalysts to me are step out drilling at Montclerg, and that will probably be will be a largely H2 focused thing. Then we think about some of our more regional targets. Those are often more well tested in frozen conditions and wintertime drilling, which will be Q1 of next year. So those are the two things we try to balance in terms of pushing on the exploration side. Obviously, we'd love to get some clarity on the strategic path for Rattlesnake. I think investors should always trust management to say, what's the right way to advance Pen and Dory? Are there targets we might want to step back out at and still have another look at? And we are doing that. We are reviewing those, bringing another set of eyes on board at the VP level with Anders Carlson brings us another review of this target pipeline. And as we talked about off the start, was like, sometimes a target needs a different set of eyes. It needs to be looked at a different way or a different search space. And that often is advanced by changes in personnel. We are inherently humans and sometimes get too stuck in one model. And often gold doesn't follow the model we think. So, but it is where it is. So if you're seeing all the hallmarks of a really interesting target, maybe you just got to change your model.
Interesting. Yeah, lots to talk about here. Lots more I would like to talk about. I mean, I think that I'd love to delve more into the philosophy and rationale behind your exploration model. But I think we've probably come to the end of this conversation. Just for the sake of time, Brian, parting thoughts or final words to you?
Yeah, no, look, really appreciate the opportunity to talk a little more detail on GFG. I find too often we get in an investor pitch that's like 15 minutes, bang, bang, we got to knock this thing out. And the reality of is what we are doing is difficult to convey over that time frame. So I'm thankful today that, we can talk about, strategy and pivots and longer term wisdom, that ultimately these are the things that drive exploration and drive the successes in the business. And you may well have, the first drill hole, a great discovery, but that's almost always not the case. So I'm happy to be able to just shed a little light on the history of GFG, the evolution of our portfolio, the strategic thinking of the management team, and what really to be excited about going in for the next 6 to 12 months.
Perfect. No, thank you, Brian. I'm glad and I'm thankful that you feel maybe you had some time. Your ideas had some elbow room, I guess, proverbially, right? If you're listening in, thank you very much. GFG Resources is the name of the company. You can go to GFG Resources, just how it sounds.com for more information. Great, strong website. Brian, thank you for your time, articulate conversation. I enjoyed your thoughts. Thanks for coming on my show.
Yep. Thanks very much, Matt, and all the best, everybody.
Great. Have a good day.